Hey everyone, Steve here from My Crypto World. Well, the market has certainly taken a tumble. Let's have a look at where things are at the moment and see what has happened. And then we'll go through some queries I know everyone is actually asking at the moment. There seems to be a lot of hate out there for YouTubers. I'm grateful that nothing's come my way, but in reading some of the posts of other people I follow, I really feel for them. The market can be very hard to predict. But we'll go through that and explain why most people might have missed this cycle dip in a moment. Okay, everybody, let's have a look at the market and see what's happened over the last couple of days and even hours. Now, if I could just preface this video in saying that there is a lot of market research that goes on into these videos. There are stacks of people on YouTube and other media platforms that do a lot of research and a lot of analysis. But the truth is, nobody truly knows what's going to happen in the market from one moment to the next. We do our analysis as best as we possibly can to get a level of understanding of what we think the market might do. Now, the truth is, the market doesn't care what we think. The market doesn't care about our hopes and our dreams and our goals. The market is going to do what the market's going to do, regardless of good news stories, regardless of bad news stories. That's just the way the market works. And that's the way the markets have always worked, regardless if you're looking at the crypto space or whether you're looking at the standard stock market or the property market for that in that case as well. Now, despite the amount of hate that might be going around at the moment, unfortunately, regarding the market dip, the truth is you cannot predict this sort of stuff, and this stuff is great to see in hindsight. And sometimes we just get it wrong. And that's what's happened here. Now, I've seen a lot of people on the Twitterverse and a lot of people on YouTube and some other media platforms really canning a few YouTubers out there because they didn't predict the market would fall. I just want to tell everybody to just take it easy for a second because I follow a lot of people on YouTube as well. There are some great commentary comments out there from YouTubers, people who do a lot of time or spend a lot of time doing their research for free. And in every single case, all the YouTubers, all they say, and so do I, this isn't financial advice, it's just our financial opinion. I don't know how many times I've explained to people or suggested to people that you also need to do your own research, come up with your own ideas. So that's where things are at the moment. What I'm going to do now is I'm going to cut from this video and I'm just going to go through and highlight a video I did about 2 or 3 weeks ago where I explained the market may in fact drop below the $1.866 trillion mark, which has just done that. So let me bring that up again so you can all see it, and then we'll talk about how we're going to move forward from here. So we jump over to our charts. Let's have a look here at our total market cap. Now, last week, I spoke, by the time I'd done my video and posted it up, I thought this cycle had ended. It absolutely hadn't. The market did fall all the way back down to our big support line at 1.866 trillion. Went slightly below it, but then closed up above it. Now, if you're somebody who watches what I do on a regular basis, you know that closing below or above a certain resistance line or support line is really important. When your stock or coins are falling, if it breaks through a support line, you don't want to see it closing below that, really. You want to see it bounce back up from that like a spring and close above it, and that's exactly what it did. And since then, the market's been quite bullish over the last, say, 4 or 5 days. Really thinking that it's going to take a dive any lower, but however, we have to be prepared for that, and if it does go lower than that, then we look at the next support and resistance line. At this point in time, if it does break and fall below the $1.866 trillion mark, it will probably land around about the $1.13 trillion mark. Now, before you panic, that may not happen. It probably won't happen. I think it's got a higher probability of going up. Again, this is just my financial opinion and the way I read the market. Now, if it does go below the $1.866 trillion mark, you've got a couple of options. Obviously, one of them is to hold. The second would be to sell. And your third option, which is probably my most favorite one, is to dollar cost average in. We've spoken about that in previous videos. Okay, so that video was from one that I did back on the 14th of January in 2022. So literally 14 days ago, 2 weeks ago. Now, in that video, as you would have seen, I also predicted that I didn't think the market was going to drop. I had a more of a bullish sentiment on the market, and it just goes to show you all the indicators on the chart looked like the cycle was over, and that we were probably headed for more positive territory. Didn't work out that way. But I did alert to the fact that if it does break its resistance line at 1.866 trillion, you had three options, to hold, to sell, or to dollar cost average in. And at the moment, I've got to tell you, seeing that coins like, for example, Theta at $2.73, in my experience, that is an absolute bargain. XRP at just under 60 cents, Zilliqa at 4 cents, Sandbox at $3, IOTA at 77 cents, Hollow at 0.004, the Ethereum, down to 2,400. These are bargain prices, in my opinion, and I think there's a lot of money to be made through this part here. Now, I just wanted to highlight as something else that's I've seen on my chart that I didn't realize when I was recording that previous video. Most of the time what I do to highlight a support or resistance line is I highlight it in a very thick color. So you can see I've got the $1.866 trillion mark. That was a support line here and a resistance line as well. And I highlighted that in purple. I highlighted the next one, the next major one in orange. And I also had what I thought was the next major support line being here at 1.13 trillion. I must have put this on the chart a little while ago, and because it's such a faint line, I've completely ignored it. But there is another support line here at 1.484 trillion. And you can see this resistance line is just above this support sector here. So let me just try and, if I can make that thicker, so it's easier to be, there we go, that's much better. That's probably why I missed it, or I was probably reading the chart without my glasses. So at the moment, when we zoom this in, we can see that we are just sitting above the $1.484 trillion mark, right on this support line here, which was a resistance line way back in, where are we here, June, July this year. Last year, sorry, where it came back down, bounced off the $1.13 trillion support, and then went ahead and broke all the way through that, came up, came back down again, bounced off the $1.778 trillion resistance line, and then continued to go up. So we've broken through the first two lines. We've broken through the top purple one, and the next one, which is highlighted in orange, and we are heading towards the blue one at the moment. Now, to give you some clarity around my thoughts on the market at the moment. Now, again, I've got to say, I could be very, very wrong. I've been wrong in the past, very happy to admit it, but also very happy to put my neck on the line and say this is where I think things are going. Now, what I've got on the chart, I normally don't have a lot of indicators on the chart. I've said in other posts, I've had some private clients come to me in the past they had so many indicators on their chart, you cannot read the chart. So sometimes you're better off just ripping all these indicators off and just having a look at the chart for what it is. Now, the problem with a lot of indicators that are generated by the computers is a lot of them lag. So what I mean by that is, you get the death cross that happens on Bitcoin with the multiple moving averages, but it's a lagging indicator. The cross happens well and truly after the market's already fallen. The same thing when the market reverses, when you get the 200-day moving average crossover, the market's already taken off. It can sometimes be 8 to 12 weeks before the indicator shows that the market's in a bullish territory. And that's the issue with a lot of the computer-generated indicators. However, the RSI is a little bit different. It kind of shows you how things are right now based on market sentiment. Now, what I want to show you is normally what you want to see is again, I'm applying this to the total market cap because that's what I like to use to get an overall view of things. You can still apply this same RSI to Bitcoin, to Ethereum, to any of the coins that you might be trading in the market. And what you want to look for are patterns. So the way the RSI works, relative strength indicator it's called, when the market is safe, it's trading within the purple zone that's on the screen in front of you. And what you want to look at is when the market is oversold, the RSI will break through its low point of 30, of the RSI 30 there. And so you can see that's what is happening at the moment. So when we go back in time and have a look at the last time the RSI was broken, which was around about here, let's have a look and see what happened then. So I've got to zoom this in. Sorry, wrong way. I've gone the wrong way there. Oops, that's not working. Okay, so the last time this happened to us was way back in March 2020, just prior to the market having an enormous growth, an enormous bull run. So I'm not saying that's going to happen this time, but I'm saying it's very interesting that the last time it happened, that's what happened to our market. And we're facing the same thing now. Now, sometimes people think, oh, that's just a coincidence. It may not have, that probably really didn't happen. Well, let's have a look back further. So again, the RSI broke through its low here, which is right about here. The market continued to go down. It broke again. The market started to go back up. And then the market did go up, but then plummeted. It was overbought here. Market came back down. It was all of a sudden oversold, and then the market shot back up again. So you see this pattern of in and out that this RSI indicator gives you. So you sort of know that really what you want to look at, what I use an RSI for, if it's been oversold, this is a perfect time to get into the market. It's likely that it's going to shoot back up again. And for short-term traders, I'm not a short-term trader anymore. I'm more of a long-term trader and investor. But for short-term traders, when they see that the market's been overbought, that's probably a good time to take some profits. Now, I've spoken about dollar cost averaging in. You can absolutely dollar cost average out as well. So you might sell, you don't have to sell the whole lot. You might sell a portion of your stake in a particular crypto and to give you some extra cash flow, or you might be able to convert that into a stable coin or another coin that you haven't gotten into but you needed money for. And so that's what you use the RSI for. So from my point of view, at this point in time, being the 23rd of January 2022, I do believe that the market will move up from this, and it may move up from this quite dramatically. So if that's the case, hold on to your hats. Now, again, you've got your own decisions to make on how comfortable you are with the way the market has fallen. I spoke to you in the very last video, which I did only yesterday, about the cycles, where I have a 30-day cycle on the total market cap, and I spoke to you about the 4-year cycle that is just, as far as I'm aware at this point in time, has concluded, and we are at the very beginning of another 4-year cycle. That's not a good or a bad thing. It just, cycles happen. It's all part of life. But we might see a period where the market could very well not even drop. It might just go sideways, which is, actually boring. It might just go sideways for a number of months, or even up to a year. It's done that before in the past as well. So I guess the next thing for you to do is to determine what you're going to do with your portfolio. Are you going to sit on it and become a long-term investor and trader? Are you going to get out? You just can't handle the loss or the emotional roller coaster that goes with it? Or are you going to dollar cost average in? One question I would ask of yourself to think about is, what do you think the total crypto market cap is actually worth? So when you ask yourself that question, a lot of you will come up with different answers, but I can tell you what my opinion is. I reckon this market, which is currently sitting at about $1.5 trillion, I reckon this is worth at least anywhere between 10 and $20 trillion at the moment. I think it's vastly undervalued. When you've got companies like Google, which we spoke about yesterday, and Facebook, which we also spoke about yesterday, coming into this space, We've got projects like Bitcoin Cash, Digibyte, Zilliqa, Theta, Sol, all those projects coming online and doing what they're doing. Now, remember, those projects are still operating. It doesn't mean that those, from a financial point of view, you could say that, well, the crypto's dropped, so that company's value is now less. That's probably true. But these companies aren't going to pack up shop just because their price has hit an all-time low, or it's lost 50% of its value. Have a look at the projects that's underlying them and underpinning them. And I know that you will know this too, that these projects are a long-term investment. We are so early in this space at the moment. Just think where ADA Cardano will be in a year's time, 2 years time, 3 years, 5 years. The same with Theta. Where is that going to be already? It's already a juggernaut. It's already doing things that nobody else has ever done before or thought of before. It's got multiple US patents out ready to go. So just imagine where they're going to be in that period of time. It's often said that there are no get-rich-quick schemes, and everybody wishes there was. I mean, I wish I wasn't having this conversation with you. I wish I was saying, yeah, the market's bullish, we're all making tons of money, life is great. It doesn't quite work like that, unfortunately, even though we all want it to. And it comes back to what I said before, the market doesn't give two shits what your goals are. The market is going to do and act the way it's going to, and it's our job to try not to react, but to respond with a level head and just have a think about where things are going. Many people watching this would have had plans crushed in this last downward this downturn that's happened in the marketplace. Be patient with yourself. The market will always come back. Markets just don't disappear. That's all I can say about that. Anyway, I hope this has been informative. I hope that gives you some sense of comfort that the market will never disappear. It may just be a longer waiting period for you if you had certain goals and aspirations you wanted met. Again, if the market does reach its peak of what I think it should be anywhere between 15 and 20 trillion, we are at a tenth of it at the moment. So we've got good times to come. We just have to wear this out. That's it from me. Take care of yourself and each other, and we'll see you in the next video in about a week. Cheers.